Good afternoon, everyone. We'll start with lesson 5, leverage. We've already discussed this in the classroom. This is one step ahead of CVP analysis. In CVP analysis, we learned about sales minus variable cost is equal to contribution minus fixed cost is equal to EBIT. Here we'll go one step ahead and we'll also learn that minus I, EBIT minus I is earning before tax. So earning before interest and tax minus interest is earning before tax. Let us understand what leverage means. Leverage, the word comes from the word lever. Leverage represents risk. It represents the point where it is which has to be which magnifies the risk or which increases the risk. And let us study now. Leverage means the use of assets and resources of the fund having fixed costs in order to increase the potential returns to shareholders. So we can use fixed cost in the most efficient manner and can increase the return to the shareholders. Leverage are of three kinds: operating leverage, financial leverage, and combined leverage. Operating leverage. It is the firm's ability to use fixed operating costs to magnify the effect of changes in sales on its EBIT. Operating leverage is equal to contribution upon EBIT. There is also degree. So degree of operating leverage is the ratio that sums up the effect of an amount of operating leverage on the company's EBIT. So degree of operating leverage is calculated as percentage change in EBIT upon percentage change in sales revenue. Characteristics of operating leverage. So if you look into these two concepts, let us talk about degree of operating leverage. It tries to find out what is the percentage of change in EBIT when 1% change in sales revenue happens. So how sensitive your EBIT is to your sales is degree of operating leverage. And when you will look into operating leverage, it is contribution upon EBIT. So contribution minus fixed cost is equal to EBIT, and when we look into operating leverage, it is contribution divided by EBIT. So what happens, we are trying to calculate the ratio of profit before fixed cost and after fixed cost, and fixed cost represents operating risk. Now characteristics of operating leverage related to fixed cost: highest operating leverage near break-even point. So highest operating leverage always happens near break-even point. Measures of operating leverage: fixed cost to total cost, percentage change in operating income to percentage change in sales, and net income to fixed cost. So these are the measures of operating leverage. First of all, what is the ratio between fixed cost and total cost? Then percentage change in EBIT upon percentage change in sales, and net income to fixed cost. Financial leverage. It is also known as trading on equity. It is a potential use of fixed financial cost to magnify the effect of change in EBIT on the EPS. So financial leverage is EBIT upon EBT. So if you look into this, EBIT minus I is equal to EBT as we discussed. So the ratio of profit before I and ratio of profit after I is financial leverage. And degree of financial leverage refers to the percentage change in EPS as a result of percentage change in EBIT. So degree of financial leverage is percentage in EPS caused due to 1% change in the of EBIT. Now, financial leverage, what are the characteristics of financial leverage? It is concerned with liabilities side of the balance sheet. Yes, it is related to fixed cost loans, then related to fixed capital cost, then financial risk. It represents financial risk. What are the measures of a financial leverage? Debt to total asset ratio, debt to equity ratio, and interest coverage ratio. importance of financial leverage. Tool of profit planning. It is a tool of profit planning. It is a tool of capital planning. It maintains balance between the debt and the equity. It helps in the analysis of the financial performance. It maximizes shareholders' wealth. It helps to lower down overall cost. It helps to increase the market price of the shares. It is useful to take up new projects and expansion projects. It helps to analyze the impact on EPS. It measures financial risk of the firm. So these are the importance of financial leverage. Let us understand what is difference between the operating leverage and financial leverage. Operating leverage is associated with investment activities of the firm, and financial leverage is associated with the financing activities of the company. The operating leverage consists of fixed operating expenses of the company. Financial leverage consists of operating profit of the company. In operating leverage, it represents the ability to use fixed operating cost, and in financial leverage, it represents the relationship between EBIT and EPS. Operating leverage can be calculated by contribution upon operating profit. Financial leverage is calculated by operating profit divided by profit before tax. Operating leverage, a percentage change in the profits resulting from the percentage change in the sales, is called as degree of operating leverage. A percentage change in taxable profit as a result of percentage change in EBIT is financial leverage. Trading on equity is not possible while company in operating leverage. Trading on equity is possible only when the company uses financial leverage. Operating leverage depends upon the fixed cost and variable cost. Financial leverage depends upon the operating profits. Tax rate and interest rate will not affect the operating leverage. Financial leverage will change due to tax rate and interest rate. So these are the differences between operating leverage and financial leverage. Let us go for combined leverage. It expresses the relationship between the revenue on account of sales and the taxable income. So it is contribution upon earning before tax, called combined leverage is equal to contribution upon earning before tax, and it is also represented as operating leverage into financial leverage. A degree of combined leverage is the leverage ratio that summarizes the combined effect that the degree of operating leverage and degree of financial leverage have on earning per share given a particular change in sales. So degree of combined leverage is percentage in change in EPS, earning per share, divided by percentage change in sales. It is also mentioned as degree of combined leverage is equal to degree of operating leverage and into degree of financial leverage. So with this we come to the end of leverage part, and with this second unit of financial management also comes to an end. Thanks a lot. I hope you all enjoy the session. Thank you.